Hey Suffield, home prices are showing resilience. But what does that look like for our local market? Take a listen to this month's Suffield housing market update. First, let's take a look at what's been happening in Suffield. In Suffield, 5 homes came on the market, and that's down 58% from January 2022. 7 new listings came on the market, and that's down 22%. The sale price to list price ratio is 96.43%, and that's down 3% as compared to January 2022. And the average sale price per square foot is $227, and that's up 21% from last year. The average sale price was $552,000, and the average days on market was 46, which is down 47% from 2022. Now, if we take a look at inventory levels and the absorption rate, Suffield is currently at 2.5 months inventory, and that is up from 1.67 months in December. Now, how that works is 6 months is considered a balanced market. Anything more than 6 months is a buyer's market, and anything less than 6 months is a seller's market. So we're at 2.5 months, so we still remain very low inventory or low supply. Last year, we saw a shifting market as interest rates continued to rise. However, it seems that the peak of the mortgage rates are behind us, and rates are continuing to stabilize. I've been hearing a lot of things out in the marketplace as it pertains to rates increasing and the effects that have had on pricing. No doubt they forced a bit of normalization out there in the market. But as we're seeing rates continue to stabilize, we're also seeing buyer demand once again increase. And listen, with our supply of inventory already being low, if a house is priced right, we're seeing it sell quickly and even with multiple offers. Now, I'm not suggesting that we're back to the frenzy that we saw in the height of COVID, but I am seeing buyers once again adjust to the interest rates and adjust to what it's going to cost to buy a house. I think this graph does a great job. We think about rates, we think about the 30-year fixed rate. 7 to 7.5% is going to bring weak buyer demand, and we certainly saw that over the summer. 6.5 to 7 limited buyer demand. 6 to 6.5 we're getting into good buyer demand, which is where we are right now. And then we break through the threshold to get into the high 5s, and we'll see strong buyer demand come back into the market. The biggest issue I believe we're going to face as we head into the spring market is not actually interest rates. It's that the supply of inventory is low and the new listings coming into the market are not keeping up. Let's spend a moment on that. As you see with this red line here, that's new listings coming to the market in 2022. And so we started out the year, new listings coming and starting to almost eclipse where we had been in previous years. And that was sort of the case that many people were calling for a crash, is that new listings were going to continue to climb as the market slows. But in actuality, here's what happened. New listings started to fall, and we brought new listings to the market at a slower rate than in the past 2017, 2018, 2019, 2020, and even 21. And we know that's what kept upward pressure on prices. No doubt the number of transactions in volume slowed, but new listings coming on the market is our challenge as we head into the spring market. We need more houses to sell. Now, I certainly understand there is some uncertainty out there of even where am I going to go? But the fact of the matter is, you are in a better equity position than you ever have been before. So the question is this now an opportunity to do something with all that equity? Mike Simonson from Alto said, "I'm looking at the latest housing data and I see surprising demand indicators, including home price resiliency and supply staying restricted," which is what we just talked about, restricted inventory. He goes on to say, "Who would have guessed that?" Well, I think watching the market and not seeing a flood of new inventory or foreclosures is what's keeping upward pressure on pricing, or home price resiliency, as he's calling it there. And if you think about the chart we saw earlier, there are strong demand factors, and that is going to continue as mortgage rates continue to stabilize. So what's the bottom line? Home prices are showing stability or resiliency. The health of the spring market relies greatly on more new listings coming to the market, especially as buyer demand increases as rates continue to stabilize. So home sellers, I ask you this. With all that equity you've seen over the past couple years, is now an opportunity to do something with that equity? Curious what the equity looks like in your house? Click below and have a look. Thanks for your likes, shares, and comments. And if you found this information useful, hit that subscribe button below. All right, that is your February Suffield housing market update. See you next month.